Maxime Laurent-Bellue, you are Head of Tactical Strategies at Tikehau Capital. Thank you for joining us on BiTV.
Thank you, Luc, Etienne. Thank you very much.
Tikehau Capital recently announced the launch, alongside Altarea, of a real estate credit platform targeting 1 billion euros of capital commitments. What makes such a strategy appealing for investors in the current market environment?
So I think there are different answers to that question. The first one, and quite basically, is that the opportunity set is there. We've been at Tikehau, we've been thinking about launching such a strategy for quite some time. We felt the timing was now ideal, simply, and essentially because the environment has dramatically and quickly changed over the recent months, obviously, underlined by the very brutal and sharp increase of interest rates, obviously, direct consequences, expected decrease in valuations, and the sort of ultimate consequence we think will be a sort of a massive funding gap that will be that we expect in the market. And whenever there is sort of a liquidity shortfall in any market, I guess it creates better underwriting terms. And we are, I think that's a broader comment, but we've been over the recent months moving into a more lender-friendly market, and that applies to corporate and real estate as well. Obviously, after almost a decade of free money and zero interest rates, where lending had become almost a commodity, right? I think we're past that now. Financing is more scarce, and basically it gives back leverage to lenders. And so what we think simply is that we will be able to originate and provide investment opportunities and financings with very attractive risk reward. That's what we do on a daily basis, and that's what we think the environment will make easier. To add further color on this, I think obviously it's more specific to us, but we have a comprehensive platform at Tikehau, and real estate and private credit are our two largest and main line of business today. We manage 15 billion in private credit. We manage 15 billion in real assets, and having a sort of proper real estate credit business was a natural extension to these businesses. And we think our platform and our expertise are quite relevant to bring the best of ideas to our investors. Lastly, I would mention that the partnership we've been entering with Altarea also makes a big difference, because as you know, maybe we have at Tikehau we have now a good track record in partnering up with industrial companies and large corporates, right? So we did that when we launched our decarbonization strategy by partnering up with Total. We've been doing that recently with Unilever as well, in the regenerative agriculture sector, and also in the aerospace and defense. And so I think teaming up with an industrial and an operator in the real estate market will also be a very strong differentiator that makes the proposition quite appealing to investors.
Okay, thank you. And you started off saying the set of opportunities was there. Where do you see the main opportunities for such a strategy from a sector and maybe geography point of view on the European real estate market?
So the strategy, I think, and the strategy will obviously be focusing where we see opportunities, but it will be opportunistic in essence, and it will be broad by design, which means that the types of situation that we are willing to address can be relatively diversified. So in terms of use of proceeds, we'll be able to, and we think there will be a lot of opportunities in providing acquisition finance, development and redevelopment financings, but also refinancing, right? We expect some massive refinancing needs in the real estate space, or for any asset-backed project, basically, for the reason I was mentioning before, and the funding gap that we can expect on the back of decreasing depressed valuation and increased cost of funding. In terms of underlying, as I said, we would look at a mix of development, pure development projects. We will look at refurbishment or redevelopment as well, and we will look to finance existing assets as well. So it's quite broad. The underlying, obviously, commercial real estate is probably a big thing. We're quite cautious at the moment. We think it's too early, but we will be able to address such situations, especially in difficult refinancing context. But we also expect to look at opportunities in the retail space, in the logistics or residential segments of the market, and that's where actually we've been doing most of our transactions over the recent years, where we've always been quite broad in our sector and underlying approach. In terms of geographies, I think as we're not going to be very original here. We usually operate on a very local basis at Tikehau Capital in all of our private asset strategies. So our core focus will be Western Europe. Obviously, both Altarea and ourselves have our domestic market in France. So France will be a big market for us, no doubt. But beyond France, we will be actively looking at the UK, where we've done many deals in the past. We will also look at Spain, Italy, Benelux, Germany. I think all of Western Europe, where we have local presence, local teams, and the ability to source locally opportunities and get the support of local execution team, will be a core focus for us.
Okay, you mentioned the funding gap and the refinancing prospects, a difficult prospect for a lot of investors in the coming months, and obviously the financing environment has changed in recent months. What role do you see real estate debt strategies play in this new real estate financing ecosystem going forward? What place can they occupy in the financing chain, let's say it like that, for investors to finance their operations?
Well, I think simply we expect the credit funds to be more and more active in the space, because I'm sure we will not be the only one having this intuition and this view on the prospects of the asset class. So we expect the asset class to grow. It's not a new asset class, obviously. There have been alternative lenders in the space for quite some time. But if you want to think about a parallel, maybe, but direct lending, corporate direct lending, typically has emerged on the back of the GFC in Europe, right? It was barely an asset class pre 07-08, and then it really emerged on the back of this sort of liquidity crunch that was quite massive at the time. I'm not saying we're getting there on the real estate side, but we definitely expect more traditional lenders to retrench a little bit from the market, whether we're talking about banks or insurance companies, and credit funds will probably have a larger role to play. I think the market is large and broad enough for both traditional lenders and credit funds to provide solutions, potentially to partner up in some situations. Typically, our strategy will be also aiming at providing a subordinated financing and mezzanine. So we would definitely consider providing solutions together with banks in some situations. But again, to come back to your question, we think some of our peers will do the same. Probably some have already started. We expect these strategies to expand in the months and years to come. And I guess the other main reason is that we don't see interest rates coming back to zero anytime soon. There is a sort of a wall of maturity to address. Capital structure will need to adjust as well. And so we will need further liquidity. So no doubt the asset class will grow and have a larger role to play.
Great. Thank you very much, Maxime Laurent-Bellue, for your time, for this valuable insight.
My pleasure.
Thank you all also for being with us. We'll see you soon on BiTV.
Thank you, Luc Etienne.